Hi friends, Bruce Whitey here, host of Straight Talk Wealth Radio, heard in Southern California on broadcast AM radio and podcast on the internet. I want to take just a minute of your time to tell you about an investment asset class that until recently has been largely acquired only by institutional investment banks and used to hedge their risk against any setbacks in their stock, real estate, or gold portfolios. In fact, in 2013, Warren Buffett's Berkshire Hathaway invested $60 million into this very asset class, and they already know that they have arranged to get a return of $300 million on that principal within a reasonable amount of time, no ifs, ands, or buts about it. And in fact, they're not alone in this strategy. The same institutional asset class is also well understood and has been bought by Credit Suisse, Deutsche Bank, Merrill Lynch, Goldman Sachs for the same purpose of hedging risk in their portfolios too. So what is it? And how can this asset class, now becoming much more popular with individual investors, claim to deliver double-digit returns with absolutely no market risk? It's called life settlements. Now, a life settlement is a transaction where a life insurance policy owner, usually aged 75 or older, sells their life insurance policy to a third-party investor for a sum of money that is greater than the cash value they would have received by surrendering the policy back to the insurance company, but it's less than the policy's actual death benefit, known as the face amount. Now, you need to know that such a transaction is not the domain of healthy seniors who have no current health problems. More typically, a senior who wishes to sell their life insurance policy, which has been upheld by the United States Supreme Court as their own financial asset, which can be leveraged like any other financial asset one owns, well, that senior is going to be someone who has encountered a health problem currently, and one which can be clearly plotted to a precise actuarial calculation of their current life expectancy. In other words, this is a win-win situation because the seller receives more than he or she would have received from the insurance company, and very typically for a long-term care or urgent medical need, and the investor receives a fixed amount on his or her investment that's commonly 100% or better. Now, for an institutional investor, life settlements are a compelling buy and hold proposition. Life settlements do offer double-digit return potential with low risk to principal and no correlation to capital markets. It literally doesn't matter if stocks soar for the remainder of this decade or if they collapse in what some say will be the downside of the central bank stimulus-driven bubble, or if gold further loses its luster, or what real estate values are going to do when cash-on-the-barrel speculators have left this market and interest rates begin to rise again. It just doesn't matter. And it does not change the outcome of life settlement investing one iota. It is truly a non-correlated asset. What I believe is probably your best bet to find true diversification in your portfolio with very competitive returns. In fact, according to an 11-year empirical study by the London Business School, purchasers of life settlements across their sample could have expected to earn an annual return of about 12.5% from 2001 to 2011, with a low of 11% per annum from 05 to 07, as much as 18.3% in 2011. Since 2001, banks have committed capital in excess of $35 billion to this asset class, and another $65 billion is expected by 2016. So, as I've indicated, institutional money is not sitting on the sidelines with this. Now, obviously, you would have to have a lot of questions about all of this. How has this type of asset class now become available for individual investors? How can someone invest with maybe as little as $25,000? How can the returns of this be made 100% tax-free, or the contributions made 100% tax deductible using IRAs, 401ks, and other qualified plans? And of course, you'd want to know clearly what are the disadvantages and what risks, if any, do exist. Well, quite honestly, those are really only the most very basic questions. And of course, we've prepared a free complete information packet for you on all of this from Reliant Life Shares. They're one of the most respected leading brokers in life settlements in the United States. And this is entitled institutional profitability brought to the individual investor. And we'll be happy to send this kit to you if you'll simply complete the form on this landing page. Now, however, in the spirit of full transparency, I should tell you up front what is not in this information kit. Specific, real-time market offers of policies with their specific write-ups of the negotiated fixed return that they're being bought for, and a lot of these returns are often 100% or better, what the age and exact health status is of the insured, what are the actuarial statistics of a similar group of 1,000 other cases, and this curve actually shows you what your annualized rate of return would be on any such case if the policy were to mature in 3 years, to 5 years, to 8 years or more, and how many of the 1,000 would have matured by that time. Now, obviously, we can't blithely mail out such documentation to anybody writing us, but here's how you can see this very crucial information about specific life settlement offers where the rubber really meets the road. You can join us for a free steak dinner and let us bring you a selection of such cases for you to review. And believe me, if you've ever listened to Straight Talk Wealth Radio, you met me personally, you know I do not pressure, sell, or close deals. I don't need to. And I don't want clients who don't truly want what I offer. So relax. It's only dinner and a conversation. And fact is, you do have to qualify to be invited to one of our local dinners. Now, you don't have to be a millionaire to be invited, but you do have to accept my short phone call to determine if we would really be adding value to your evening or not to bring you these real-time examples. So when you complete this form, you need to be sure to include a phone number where I can personally reach you and 2 best times to reach out to you. Now, if on that phone call, we both just determine that it's really not time for you to get serious about this yet, then no problem. I'll be happy to send you the complete information kit, and you're welcome to stay in touch with us about future dates for our dinners. But I urge you, as good as the markets appear today, somewhere this decade, the tides will change once again, and they won't announce themselves ahead of time. So be prepared. Learn how you can get double-digit fixed returns with absolutely no market risk, so that when the benefactors of quantitative easing, stocks, real estate, and gold all change course this decade in one great correlation, for perhaps the first time, you will possess an instrument of true diversification. So fill out this form, and we'll call you when dinner's ready. Thanks for listening, and we look forward to hearing from you. I'm Bruce Whitey from Straight Talk Wealth Radio.
Welcome to Straight Talk Wealth, heard every Sunday morning at 8 a.m. with your experts in all aspects of wealth accumulation, preservation, and income planning, guaranteed to last a lifetime. And now, your host of Straight Talk Wealth, Bruce Whitey, on News Talk 1590 KVTA.